Hey everybody, welcome to week 65 of the Ag Commodity Corner Plus podcast. Today is the 3rd of July 2026. Mo, what are we talking about?
We're talking about these big reports that came out, particularly the USDA June acreage report and stocks report, as well as the Stats Canada seeding report. So let's get into it. Again, thanks for watching. Don't forget to subscribe to the channel. You can see from the weekly summary quote chart, we had some weekly higher closes, and that's key. If we talk about bullish key reversals, we've had about two here at the end of June, and we've got Kansas City, Minneapolis, cotton, CME lean hogs all reversing higher, closing higher than last week. Corn came within 1 penny, beans within a penny. So a little disappointing there on Friday's close, but it was also a long weekend. Maybe people already gone. It's summer. It's heat, all that fun stuff. Canola did close lower, meal lower, soy oil a little bit lower. Chicago wheat wasn't able to. It's been the most bearish of the three wheats. Shouldn't say that. Maybe the funds had the longest short or the greatest short position in Chicago. But I think what market's showing you is that we may have overshot the mark to the downside. The funds were betting big on the downside going into these reports, and I think they were wrong. We got cattle off a little bit. Dow Jones new record highs. S&P close. Nasdaq. The Nasdaq 100 doesn't show you the correction in the chip stocks, but there was rotation. Some of these names, these AI names, were down 20, 30, 40%. So, what else? Crude slightly lower. Gold and silver, the metals bouncing a little bit. And maybe the US dollar is peak. We'll have to wait and see. All right, let's talk about this June acreage and stocks report from the USDA.
Let's start with the June acreage reports, which are key for the annual crop year. The stocks report came in friendly/bullish for US corn and wheat. As you guys can see on the screen, corn endings, or rather stocks as of June the 1st at 5.295 were lower than expected. All wheat at 0.92, also lower than expected. Soybeans, on the other hand, was slightly higher.
Yeah, so the 9.2 was lower than expected, not higher, right?
Lower, yeah. The soybean numbers were higher, is what I meant.
Okay. So soybean numbers were a little bit higher. This 5295 was 115 million bushels less than expected, and that showed strong disappearance usage. That means the USDA is gonna. We've been talking about this for months now. The U.S. export forecast is up 25%. Some would argue and say that feed and residual was too high. Is it? We got record weights: chicken, hogs, poultry, ethanol, about even with the USDA target. So next Friday, July 10th, you got another USDA report. USDA could lower ending stocks on old crop by 100 million, take a new crop down to 1860. Do we deserve to be at 440 corn for new crop? Do we deserve to be at $4 for old crop? I don't think so. But I think this could be the bottom in the grain markets. We called it much earlier than this, and markets are about where we called it on June 18th for our members. But look for retracement back up. What about the acreage report?
The acreage report was a bit of a surprise for corn, especially coming in higher than expected. So corn acreage for 2026, 95.343 million acres versus expected at 94.992. Soybean acreage also, or rather, came in close to expectations at 85, higher than the March intentions. The big news continued to be wheat, and wheat plantings continued to stick to its label as being the smallest wheat area since 1919, and the harvested acreage expectations are supposed to be the smallest since 1877. That's 149 years. U.S. spring wheat acre is also the smallest since 1956.
So the stocks report was bullish, friendly corn. The acreage report was friendly, bullish wheat. When you add the loss in wheat acres, spring wheat acres, and all wheat acres in Canada with the Stats Canada seeding report, it was a bullish reversal on the wheat. And I think short term wheat's bottomed. We've got more than 50% of the HRW crop harvested. Your post-harvest rally will soon start to happen and we will retrace back up. So this is December corn, and you can see the big plunge lower, creating perhaps a double bottom here. You can barely see it, but this is your bearish channel to the downside, and it's about to break to the upside. And I think if we look at Fibonacci tracements, the 200-day moving average looks like the mean or the average, and I think we could head back up there at some point, maybe get back into that 475 to 480. And then this is Kansas City wheat. Again, maybe creating a double bottom on the chart. For now, I think we've bottomed. And if we look at the retracement, we could maybe see it back up into that 680 to $7. You're going to need probably more time to retest those highs from May 13th. But everybody was surprised on that 32.1 harvested all wheat acres. I don't think it's over, folks. I mean, I think this thing's going even lower, and you're going to get your next update next Friday, July 10th.
We also had the June acreage numbers from Stats Canada, and it was bearish, or at least on the face of it, bearish canola, whereas it seems to be more bullish for wheat on the canola side of things. Mo, do you think Stats Canada is overestimating the canola numbers? Because there's news that possibly a lot of the farmers lost more than 10% in acreage
Well, we
due to
mentioned
flooding.
it in last week's podcast. Sorry for the, we were talking about the moisture, and it just keeps on raining. We'll get into it here in a minute. But this survey was taken late May, early June, and most of June was wet. So did they take some of it into account? I don't think so. So both the all wheat acres and the canola acres are overestimated, in my opinion. So in other words, the all wheat acres will come down further over time. It may have to come from a cash market situation. I don't know. Maybe this Stats Canada production updates will lower the acres, but this was the last seeding report from Stats Canada. So definitely weather's become a big problem.
And
then this is the canola daily futures chart. I think a lot of people are saying to you seasonally, this thing's going to go lower. And don't get me wrong, seasonally, it's a weak period for canola, but I don't think so. I think moving forward, this wet weather is a problem. We're 2 weeks behind. It's widespread. The heat doesn't show up for another 2 weeks. And then this super strong El Nino will cause an early frost. That's what it does for Western Canada. And so, hey, maybe the funds do what they did in corn. And don't get me wrong, this thing can go lower, but I have a funny feeling that if the Chinese demand shows up for soybeans, if you subtracted 10% or more from acres, because of the unseeded acres and the flooded acres, then whatever you're going to crush a lot of the canola, but whatever doesn't get crushed gets exported. And I think ending stocks below 1.5 million metric tons will stay with us through 27. At some point, and I can't tell you whether it's going to be in the month of July or August, but at some point, you're going to have to start to ration demand again, and you will retest 800 or more.
On wheat, in contrast, total wheat area came in below estimates or expectations, falling by 1 million acres from the March earlier estimates. If realized, this would mark the smallest wheat planted area in Canada since 2021. Stats Canada are likely overestimating wheat acreage as well, Mo?
Yeah, so we weren't surprised. We were forecasting 23 million acres of canola. Why? Because remember, we went from 620 to 800 and China lifted the tariffs on canola. Break even was 10 bucks. Farmers were making 16, 17 bucks. That profit was much greater than wheat. Maybe at one point you could sell wheat for 8.75 making a slight profit, but unless we get to double digits, I don't think that was enough to attract more spring wheat acres. And so I think again the funds have overshot the mark to the downside. We're about to break back above that bearish channel downtrend. And I think by the end of July, you could revisit that 675 to 7 as we retrace back up. Don't forget to try our program. If you're looking for transparency, if you're looking for someone that can, again, manage every risk on your farm, one of them is diesel and fertilizer. We've been the only ones that have been spot on with that. I'll get that here in a second. But this week we were talking to our members about what to do with your marketing plan post the USDA Stats Canada seeding report. So try it out.
Let's switch to weather. US weather is still a concern despite what some of the meteorologists are forecasting. Recent rains have helped a lot of those parts, especially in the US Midwest and surrounding regions, but 4 degrees above normal for the US corn pollination stage over the next 2 weeks is a concern. Timely rains will need to keep falling. Cool waters off of the Gulf of Alaska means more heat for the US Midwest for the month of July. There are lots of questions due to wind damage to wind turbines, wet soybean feed to tar spot, and also looking at the Canadian prairies, that remains wet for a lot of the parts there. Dauphin in Manitoba was in a state of emergency during June 28th to July 1st as they got 11 to 12 inches of moisture in just 2 days. And this, possibly could have happened over a month, but it happened in 2 days.
So let me just go back and show you some of these charts. This is a concern, and I know the meteorologists are all telling you that this heat dome's going to be temporary and it's going to move back west and everything's great. 3 to 4 degrees above normal, to me, is a concern going into pollination. We had some extreme temperatures this past week. I mean, we're talking records, 134, 120. This is 89-year drought cycle type temperatures. No wonder Europe is in that heat wave as well. Everybody says, well, rain makes grain. Does it? I think there's been too much. And with it, what I'm trying to get at, with it has come severe weather. We are 1 month ahead of schedule with these windstorms. I think with this heat wave that could continue through the month of July, you get derechos and flash droughts, which is never good. But you're talking 130, 140 mile per hour winds, EF3 tornado type winds that are destroying ag, wind turbines, and grain bins. The meteorologists have taught me that you got to watch these temperatures off the Gulf of Alaska. And all of a sudden, these meteorologists have gone quiet on me. They said by the end of June, if these waters are cooler, you get July heat. You get to extend that July. I'm trying to connect the dots for you. So does this heat dome really end on Sunday? On Sunday night, the weather forecast is going to be key, but I have a funny feeling that this is going to extend that July heat in the U.S. Corn Belt. And then, of course, with Western Canada, this was Alberta. 150-kilometer radius around Edmonton and areas got over 200 millimeters of rain. And then all of a sudden, from June 28th to July 1st, Dauphin, Manitoba, 11 to 12 inches in 2 days. Acres are not 23.4 million on canola.
Let's look at where we are at regarding Chinese purchases of U.S. soybeans. China continues to buy U.S. soybeans, but much more is needed. This week, USDA confirmed the sale of 136,000 metric tons of US soybeans for delivery in 26-27. Currently, taking into account unknown as well, we seem to be at 5.5% of that 25 million metric ton target. July 10th is a critical date. That's when the comment period on the China Board of Trade ends.
So still lots of rumors that China's looking to buy U.S. soybeans, corn. We weren't able to confirm any of it in the weekly USDA export report, but next Friday, not only do you get a USDA July crop report, but supposedly the two trading partners, China, US, are expected to meet again to talk about this board of trade. And the comment period comes to an end, and the trade was suggesting that once that comes to an end and the rules are put in place, that China could start to remove the 10% tariff on US soybeans. If that happens, that's your green light for the private crushers to start buying. And so maybe the following week you start to see the volume pick up because those private Chinese crushers are buying.
The Strait of Hormuz seems to be reopening faster than most thought, and rumors are that Iraq is looking to leave OPEC Plus, and this would follow from UAE, which left the OPEC Plus earlier, following the breakout of the war in the Middle East. As far as crude oil is concerned, that seems to keep on falling, and the next target in play is 65 on the WTI.
Morgan Stanley is still too high. We're at 70 going into 27. Are you kidding me? You're going to retest this low. I'll remind you guys in 6 months. The 2027 global glut of supply is coming. Whether you like it or not, it's bearish for prices. It's a great news for farmers. Why? Because your inputs are going to come down and your grain prices are going back up because of that Chinese demand. And so you're going to be able to eat your cake and have it too. Or what's the saying? Is that right?
Something like that.
Anyways, have
Bake
your
your
cake and eat it
cake.
too.
Yeah.
Have your cake and eat it too. So look, this thing's going to continue to come down. We've been spot on with this, and we've also been spot on with fertilizer.
Trump has temporarily suspended certain duties on phosphate fertilizer imports from Morocco to help ease supply shortages faced by U.S. farmers for fertilizer. According to USDA, the temporary suspension could reduce phosphate fertilizer prices by about 22%, saving U.S. farmers an estimated $1.82 billion annually as additional supplies enter the domestic market. U.S. Retail fertilizer prices continue to trend lower in the last week of June, marking a third consecutive week of broad-based declines. MAP, DAP, urea, all of it was down by about 28%. Or rather, they remain 28% above the 5-year average, though.
Yeah, and then did you mention this as well? So Secretary Rollins, USDA, is suggesting that they want to expand fertilizer in the U.S. They're going to spend $500 million on top of that, removing the duties on Morocco. They're trying to help the farmers, but don't get caught up in the noise. This is long term. This may just provide an extra cushion against a black swan like this war in Iran. So you can see here that DAP, we got up into that 800 plus. And this is wholesale, now back down to about 750. So unlike urea has crashed and burned lower, whereas DAP has still remained quite high. But you're creating this double top. And so I think it needs to go back to this 200-day. Remember, the funds overshoot the mark to the upside. They overshoot the mark to the downside, like back here. And so you're going to go back to this. Whether we can overshoot the mark to the downside, we'll have to wait and see. But at a minimum, the U.S. wholesale price will have to go back to around that 650. Your retail price maybe 850. So if you're getting some bids from your local suppliers, tell them to hit the road. I'm not interested. We'll wait till the fall. Take a wait and see attitude.
The 45Z calculator refers to the USDA feedstock carbon intensity calculator, And the 45Z models used to calculate life cycle greenhouse gas emissions and estimate the clean fuel production tax credit. The 45Z credit provides a baseline tax incentive for domestic producers of transportation fuels such as ethanol, biodiesel, and aviation fuel. So USDA finalized framework linking low carbon crop practices to biofuels
This
via.
is great news for U.S. farmers. If you are anywhere near an ethanol plant, maybe you sell corn to an ethanol plant, this is what you've been waiting for. I don't know if you do cover crops, regenerative ag, all that fun stuff, but maybe you have, maybe you want to start, but talk to your local ethanol producer. This could equate, depending on how low your CI score is on corn, it could amount to 100 to 135 bucks more per acre, 30 to as much as 90 cents more per bushel. Great news long term for that US farmer. Thanks for watching. Have a great weekend. Enjoy the heat and happy 4th to our US listeners and watching of the podcast. Happy Canada Day to all those Canadian farmers, and happy 250th as well. Bye for
Bye,
now.
guys.